Welcome back. Today we are talking about how to fill out a mortgage loan application. This document can be overwhelming if you've never filled it out before, and I'm going to offer a step-by-step tutorial on exactly how to fill it out, and more importantly, all the things you don't need to worry about. There is a lot of jargon, but I will explain it page by page and field by field. At the top, it says, "To be completed by lender." You don't worry about that. All right, Section 1, Borrower Information. Let's get started. This is a section where you're going to fill out your name, your date of birth, your social security number, and I think this is all pretty straightforward. But just to make it clear, you put your first name there, your last name there, your social, your date of birth, and your citizenship. Now, citizenship is important because typically you can only get a loan if you're a U.S. citizen or a permanent resident alien. So if you're a non-permanent resident alien, you would have to find a special loan program that would allow you to get a home mortgage loan. Not to say that they're not out there, but most commonly, U.S. citizen and permanent resident alien are the two types of borrowers that most easily find home loan programs. And then here, you just say, is this going to be just you on this loan application, or are you going to have a co-borrower? So for type of credit, if this is just going to be, you say, I'm applying for individual credit. Marital status, pretty straightforward. If you're married, separated, or unmarried. If you are separated, it's trickier to get a home loan because you are technically still married and you're operating under the legal assumptions of a marriage contract, but you will need to disclose that, and there are going to be special conditions in order to get that loan. And when I say special conditions, I just mean that any legal document you are operating under at that time will need to be shared and disclosed to the lender. Let's see. Any of these are fine. You just pick one. So for the sake of keeping it simple, we'll say unmarried. Dependents. This is a little bit controversial because from my point of view, they don't really care that you have children. The thing that they are oftentimes looking for here is if you say you are divorced and that you have two children, aged 10 and 12, they're going to ask you if you pay child support. A lot of times that's what this is all about. There is no penalty for having children. The amount of children you have does not affect anything about your income or your assets or the way they're looking at your loan from an application perspective. This is really a Trojan horse to find out if you have any undisclosed debt, specifically child support debt and a child support obligation that you would need to document. Contact information, just put whatever number you're using. Your current address, just list whatever it is at the time. So for how long at current address, if it's less than 2 years, you're going to need to put your previous address. They're going to want to see your rental history. This is important because if you have negative rental history, and that means any rent payment later than 30 days, they're going to consider that during your loan approval process. Now, if you don't have a housing expense, let's say you live with family, you don't pay on any regular basis, they're not going to ask you for rental history. So if you disclose that you do have rent over here, they're going to ask you for your rental history. If there's a property manager, they're going to reach out to that person and ask them for your rental history for the entire time that you've been there or going back 2 years. But if you live in a informal situation where you don't have an obligation or lease, you're better off putting that you don't have a primary housing expense because you technically don't. If you stop paying, there would be no legal implication. So when you say no primary housing expense, that just means that you live without any formal rental agreement. This is important because if you pay cash and it's an inconsistent amount, that is not something that you would be able to document very readily. And so in many cases, you would say you don't really have a required expense because there is no legal or contractual obligation requiring that you pay a particular person at a particular time, a particular amount. So my recommendation is if you have an informal agreement and you live with someone, I would say no primary housing expense. Otherwise, it's going to be very difficult for you to prove that you have a housing expense and that you pay that housing expense on a regular basis, and they are going to want to see some kind of a formal written agreement. So rather than have to manufacture something, which often people do, you would be better off to just say you live rent-free or you don't have a primary housing expense. So again, if you've been at your current address less than 2 years, go ahead and fill out this section. Mailing address, if different from current address. If your mailing address is the same as your current address, check does not apply. So current employment, this is pretty straightforward. You're going to put your employer name here. Honestly, if you don't know the address, you can leave it blank because they're going to ask you for pay stubs and W-2s anyway, and they're going to get to know all of this stuff about you. But you do need to put the name of your company and then your income. Your position or title, you should know that, so just go ahead and write that down. And your start date. Similar to your housing history, they're going to want to know if you've been on this job for 2 years or longer. If not, they're going to ask you for previous employment history. So make sure to put your start date. That's the date you began working at that place. Now, this confuses people sometimes. How long in this line of work? That is not the time you've been at the job unless the entire time you've been in that line of work, you've been on that job. But let's say you started working at this company 2 years ago, but you've been in that field or that line of work for 20 years. That's where you'd say 20 years. So while you've only been on this job since 2022, you've been in this line of work 20 years. This is important. If you are employed by a family member, the seller of a property, the real estate agent, or other party to this transaction, you need to check this box. You need to disclose if you have a relationship with anyone related to this loan transaction. As I mentioned, here you want to put your income. If you're salaried, just divide your annual income by 12 and then put your monthly income here. And that's it. Additional employment. If you have a second job by chance, that income can be used as part of your qualified income, but only if you've been on that second job for 2 years or greater. Now, second jobs have different approval and qualifying criteria than primary jobs, because a lot of times people will only have a second job intermittently. It's rare that people have a second job for a continued amount of time, although I've seen a lot of applications where they do. I've seen someone that had both their first and second jobs for over 10, 15 years. So I'm not saying that doesn't happen, but just know that if you picked up a second job a couple months ago, that is not going to be considered part of your qualified income because second jobs are usually temporary or seasonal or intermittent, and that's not considered part of your regular and qualified income from an ability to repay perspective. And if you want a recap on ability to repay, I've talked about it in a couple of the previous videos. So again, this is where you'd put information about a second job. And if you've been on that second job 2 years or more, that income will be included in your qualified income. So over here, this is where you would fill out self-employed. I'm not going to get too deep into the self-employment component because that's a large topic and I don't want to derail this video. I'm going to do a separate self-employment video, so stay tuned for that. Now this is where I mentioned previous employment. If you did not work at your current job for at least 2 years, this is where you would put your previous employment information and your previous income. This is important if you just switched jobs and your old job paid you $15 an hour, and now you have a brand new job that you just started, and now you make $100 an hour. That is oftentimes considered a red flag. Now, this does happen. People have been what I refer to as underemployed. They're making less money than they could for some extenuating circumstance, right? Maybe they lost their job, and rather than wait around for the perfect job, they took the first job that would pay them anything. That does happen. There may be a request for a letter explaining that. Don't get intimidated by letters of explanation. A letter of explanation, if a lender requires one, is not a gotcha. It is the lender's way of documenting that they asked you the right questions. It's your job to give the right answer. So, in this case, if they say, hey, we want you to give us a brief letter explaining how you went from making $15 an hour to $100 an hour, if your answer is, I'm making more money now because I just completed a certification in advanced network security and I'm now qualified for more lucrative jobs, that is a very valid and reasonable letter of explanation. So there's going to be a common sense factor throughout your loan process. So just be aware of that, right? If it makes sense to you, it'll probably make sense to the mortgage underwriter reviewing your file. But if you're saying something that's fantastical or goes against common sense, be prepared to offer additional explanations or documentation on the topic at hand. Moving along, income from other sources. I've talked about this a little in previous videos, but here we have other sources of income that you can list on your loan application. I'll go through the most popular ones. Alimony. Many people receive alimony after a divorce, and child support similar. In both of those cases, if you get alimony or child support, you are going to have to prove that you've been receiving it for the past 6 to 12 months, and you're going to have to provide the court order demonstrating the exact dollar amount of that child support or alimony. Automobile allowance. That's another one. Some people get an automobile allowance as part of their employment compensation. Again, you're going to need to document that very clearly for the loan application. Border income is a little trickier. A lot of loan programs aren't going to allow that, but some do. So you may as well disclose it and see if they give you a path towards using that income as part of your qualified income. Capital gains, that would be found on your tax returns. Disability. Disability is typically from the government, and proof of continuance is often required. However, many forms of disability are guaranteed continuance by nature, but there will be some documentation you'll need to provide. Similar with foster care. Housing or parsonage is specific to religious organizations that provide free housing or parsonage income. If you've never heard of it, you probably don't receive it. Interest and dividends, again, that would appear in your taxes, and then they would want to see that you have documented continuance of interest and dividends. For instance, if you claimed interest and dividends on your taxes last year, but you've liquidated all of the accounts that those interest and dividends were coming from, there's no proof that income is going to continue because the source of the income has been depleted. Mortgage credit certificate, very rare. Mortgage differential payments, very rare. Notes receivable, fairly rare. But if you have documented loan to someone and they make regular payments to you each month, and you can document those payments and document that you'll be receiving those payments for the next 3 years, that would be qualified income. Public assistance. While many people do get public assistance, the guarantee of continuance for the next 3 years is often hard to document. Retirement. If you are in retirement and you receive a pension or an IRA, you would document that. Royalty payments, rare, but royalty payments are generally reflected on your taxes, and same thing, as long as you can demonstrate that you still hold the asset for those underlying royalties, then that would be considered qualified income. Separate maintenance, that would also be documented and demonstrated through a court order and continuance. Social Security is pretty straightforward because by the time you get Social Security, continuance is assumed. So Social Security is probably one of the easiest forms of income to document. A trust, that gets a little trickier because in order to claim recurring income from a trust, you would have to then get documentation from the trust that they have enough assets to keep paying you that amount for at least the next 3 years. And getting the underlying asset documentation can be a little sensitive for some people. Unemployment benefits, this is another one that's a little tricky. You would have to show proof of receipt and assumption of continuance. A lot of times, unemployment benefits in terms of qualified income are directly related to seasonal workers. A lot of seasonal workers that go back and work on a farm year after year are able to claim unemployment benefits during the off season. So they are going to document that they've been receiving unemployment for the last several years, usually 2 or more, and that they keep working at farms where they're going to continue that pattern of seasonal employment. If they now, for instance, if that person got a different job where they work full-time and they're no longer working in a farm, even though they got unemployment last year, they're not going to get that unemployment this year because now they have a regular job that is no longer seasonal. Therefore, they are not going to be unemployed again for the non-farming season. So again, it's common sense, right? It's both about proving that you did receive that income and you will continue to receive that income. Both things have to be true. VA compensation is also very straightforward. Once you've demonstrated that you receive VA compensation, the majority of the time that compensation is assumed to continue indefinitely. And as I mentioned, just go ahead and write here what income source is. Let's say it's child support. They're going to ask you to prove that you're going to continue that child support for the next 3 years. So if your kid is 17 and that child support ends when they're 18, you are not going to get credit for that child support. All right, section 2, assets and liabilities. This is where you're going to put your checking and savings information, money market, CD, mutual fund stocks, etc., etc. The most common is checking and savings. My word of advice is, as you prepare to buy a home, start keeping the money that you intend to use for your down payment and closing costs in a savings account. Checking accounts contain a lot of transactional data that the lender will review if you submit those statements. To make your life easier and their life easier, if you keep the money in your savings account rather than a checking account, you are not opening yourself up to the scrutiny of all of your checking transactions being reviewed by that underwriter. The big thing with history is they are looking at 60 days of history. So be mindful of what is happening in your account in the 60 days prior to completing and submitting your loan application. So to fill this out, you'll write the account type, let's say savings, financial institution, B of A, account number. If you don't know it, that's okay, because they're going to ask you for a statement anyway, and they're going to validate this information. Don't worry about this if you don't have it on hand. Cash or market value, this is just the balance that's in the account. Other assets, this is primarily to address the case that you are selling another house and then you're going to be using the money from that sale to fund this new loan transaction. If you had already deposited some form of earnest money, you would put that here. Liabilities, credit card, other debts, and leases that you owe. Don't take this section that seriously because they are not going to rely on what you put here anyway. This is going to be filled out by the credit report that they pull on your behalf. So any credit cards, any auto loans, anything that's on your credit, you can put it here. Again, I don't take it that seriously because they are not going to trust what you write here anyway. They're going to pull your credit report and they're going to fill out this section 2C liabilities all on their own. Other liabilities and expenses. Now this you can get worked up about because these are things that probably won't be on your credit. Child support's a big one. Alimony is a big one. You are going to need to provide documentation of child support that you owe, which is usually a court order. Even if it's on your credit, they are still going to ask you for a copy of the court order supporting that obligation. Real estate. This is where you would list any real estate that you own. I'm not going to fill this out because if you own real estate, you probably don't need help filling out this form. Now, section 4, this is important. This is about the property you plan to buy. So we're going to skip this for now, and I'll come back to it in another video because this application is the first application in the step of getting qualified before you make an offer on a home. So once you identify the home that you're going to buy and you have an approved offer, you'd fill out this section. So for now, we're going to keep focusing on the loan application component before you have made an offer on a home and before you're under contract for that home. If you know you'll be getting a gift, this is where you put it, section 4D. As the loan progresses, they will ask you for proof of that gift from your relative. There will be a form and they will ask you to show proof of deposit and proof of funds availability for the person giving you the gift. Section 5, declarations. Declarations seems overwhelming for a lot of people, but take it one by one. They're pretty straightforward. Will you occupy your residence as a primary residence? So we'll say, yes, we intend to occupy it as our primary residence. No, we have not had an ownership interest in another property. Do you have a family relationship or business affiliation with the seller of this property? As I mentioned earlier, with relation to employment, you need to be very upfront about any relationship or business affiliation with people that are part of the transaction. So do you have a family relationship with the seller of the property? We're going to say no. It's not that common. Are you borrowing any money for this real estate transaction? If yes, what is the amount of money? This is a little bit of a trick question because if you answer yes, they're going to want to see all the documentation regarding that loan, and they're going to use any payment in your DTI calculation. If you want to learn more about DTI calculations, watch my previous video. It's number 4 in the series. So we're going to say no. Let's keep it simple. I did not borrow any money. Have you or will you be applying for a mortgage loan on another property before you close this transaction? This is important, and a lot of fraud occurs when people apply for mortgages at the same time, and then they try and close them all at the same time so that the debt to income is not impacted by the other loan. Meaning they are trying to get 2 loans at the same time and they're not telling the other lender about the other loan. We're going to say no, because you're not doing that, right? Will you be applying for any new credit before this loan closes that is not disclosed on this application? Again, you could be out there applying for an auto loan and trying to be tricky and not disclose it to your lender because you don't want it to impact your qualified debt. We're going to say no. Word of caution. Lenders these days have a lot of tools at their disposal to find out if you are doing these things. They monitor your credit throughout the loan transaction, and they know if you have been to an auto dealership. Don't try and be tricky. They also monitor government websites, county recorders. They monitor mortgages. So year after year, lenders get more advanced in terms of tracking these things down to prevent exactly what I explained to you. So be prepared to not do those things so that you can have a smooth sailing throughout your loan application and your loan approval process. Will this property be subject to a lien? This is pretty rare. Clean energy lien. You would know it if you had it, and this would probably not apply if you were in the pre-qualification phase, so we're just going to say no. If you were doing a refinance, this would be a little more sensible because you would know what the property was, but in this case, we're just going to say no. Are you a cosigner or guarantee on a debt that is not disclosed on this application? This does happen sometimes. You might have cosigned for someone and it doesn't appear on your credit. We're going to say no. Let's hope you didn't do that. Are there any outstanding judgments against you? Again, most judgments appear on your credit. Sometimes they do not, but a lot of times judgments, if they don't appear on your credit, will be discovered throughout the loan process. There are a few different ways this happens. There is a judgment service that lenders subscribe to, and they will go looking for judgments against you. So there are 3 places that lenders find judgments against you, if not more. At a minimum, number 1, judgments appear on your credit. Number 2, they subscribe to a judgment service where they look for judgments. And number 3, the title company runs a judgment search against you. So there are 3 definite places that they go look for judgments. So the best thing you can do is disclose them. Are you currently delinquent on the federal debt? I'm going to say no. A lot of times this is if you have a student loan that is in default. That typically reports on your credit. Are you a party to a lawsuit to which you have any personal liability is the big one. Is someone suing you? That's the essence of the question. Are you being sued and are you going to owe someone money? I'm going to say no, because you didn't do that. Have you conveyed title to any property in lieu of foreclosure in the past 7 years? This is important. You would know if you had. I'm going to say no. Within the past 7 years, have you completed a pre-foreclosure sale or short sale whereby the property was sold to a third party and you accepted less than the outstanding mortgage balance due? I actually talked about this in another video. A lot of times when your property is foreclosed, not all of the money is recouped by the lender. There could have been a negative balance. A short sale is where the lender agrees to let you sell the house because you are in default on your mortgage. And what they agree to typically, and then why it's called a short sale, is they're letting you sell the home for less than what you owe them. Usually they still hold you liable for that balance due. Let's say you owed them $250,000. You did a short sale where you sold the house for $200,000 to someone. You still owe that lender $50,000. They just don't have any security because you sold the house that was securing their loan. Now you just owe them that money personally. So if you had a short sale and you sold a house for less than the mortgage balance due, and you would know that because you would owe the lender money, we're going to say, have you ever foreclosed? Have you had property foreclosed upon in the last 7 years? That's no. In each of these cases, the big point is that you defaulted on the mortgage and the lender took a loss or had to take action against you. Have you declared bankruptcy within the last 7 years? We're going to say no. In most cases, if you have declared bankruptcy in the last 7 years, there are going to be some very specific criteria that you would have to prove in order to get a mortgage loan. All right, section 6. Now, this is where you are acknowledging and agreeing to all these things. I will go over this high level because I think I touched on this in the 5 C's of mortgage lending. And so if you want to go back to it and get a refresher, please do. You are giving complete information on this application. You're not misrepresenting information. You understand that when you are applying for this loan, it's going to be secured by a mortgage or deed of trust. I talked directly about this in that video. So this loan is secured by a mortgage or deed or trust, which is the security. That is the lender's security. The property appraisal value and condition, we talked about this in the 5 C's. Collateral. The collateral is the property. And the appraisal, as I said before, an appraisal or value of the property obtained by the lender is for use by the lender. I said very clearly in the other video that the appraisal is on behalf and for the benefit of the lender. This spells it out right here in the loan application. If you have trouble making your payments, they recommend that you contact a HUD-approved housing counseling organization. Authorization for use by signing below. And I've talked about quite a bit of this, so just understand this is where they get permission to do all the things that I've mentioned to you previously. Authorization for use and sharing of information by signing below. I authorize the lender to use and share my information, get a consumer credit report on me, get my tax return information, underwrite my loan, verify data, inform credit investment decisions, and other actions permissible, which are quite a few. And this is where you sign, but you're not done. Section 7, military service. If you are in the military, you would check whichever of these is applicable. Section 8, demographic information. If you prefer not to fill this out, you can just check the boxes that say, I do not wish to provide this information. It gives you that option for each of these demographics. Section 9, loan originator information. You don't need to worry about this. The loan originator on your loan will fill this out. So we're done. I know that was a lot. Please comment if there's a section or question that you have for me. I'm happy to answer it or go back and do a detailed analysis of any particular component of this loan application. Again, please subscribe and leave any comments with feedback. I love to hear from you, and I will definitely incorporate feedback in my upcoming videos.